The rat race is a cycle that many people are trapped in without even realizing it. This cycle involves working, paying bills, sleeping, and repeating the same thing over and over again for the rest of your life. Imagine you just graduated from college. Congratulations! You start your first job and you are full of dreams. Perhaps one of your first wishes is to buy a huge television. You buy the TV, and then you think about your next big wish, a car. Maybe you can't afford the car of your dreams at first, so you buy one that works well. Over time, you start making more money. Now, you start thinking about upgrading your house, maybe moving to a bigger and more expensive one. This is how the cycle continues. You earn more, you spend more. Simply put, the rat race is an endless pursuit of material things, like running on a hamster wheel. You never get anywhere, you just keep running and running. Let's see if you are also part of this and, most importantly, how you can get out of this routine. Number 1. Compulsive shopping. This is one of those habits that many of us have without even realizing it. This one should be at the top of any list about bad financial habits because it affects most of the world. Impulse buying is basically when you buy something that you didn't plan to buy. Imagine that you go to the supermarket just to buy bread and milk, but suddenly, you see some new cookies in the box and decide to buy them. That's an impulse purchase. It can be a cheap or expensive purchase, but it is definitely a decision you make in the moment without having thought about it beforehand. There are many reasons why we make impulsive purchases. A common trigger is our emotions. If you're stressed or excited, you're more likely to make an impulse purchase. Therefore, it is very common to read in the media that sadder people buy more since their mood changes consumption patterns. Sometimes stores do this on purpose to tempt you. For example, they put flashy things near the checkout at the supermarket or give discounts for a limited time, so you feel like you have to buy it now. Social media and online shopping also greatly encourage impulse purchases. The advertisements you see on the internet are made to attract you. In addition, buying online is very easy. With just one click, you can have whatever you want. Impulse purchases can have a big impact on your financial life. Although a small purchase here and there may seem like a minor expense, if you do it constantly, you will end up buying a lot of things you don't need. Therefore, if you want to improve your finances, it is important that you understand how your mind works and how to control those buying impulses. Number 2. You pay yourself last. This idea can be found in the book Rich Dad Poor Dad by Robert Kiyosaki, and it is one of the most important tips to achieve financial freedom. Robert explains that there are 2 ways people typically handle their finances when they receive a paycheck. The first way is what he calls the habit of poor people. This is when you pay yourself at the end, after paying all your bills. In other words, once you receive your salary, the first thing you do is pay the rent, the phone bill, subscriptions like Netflix, and other expenses like going out to eat or going to the movies. Only after paying all that, if you have any money left, then you save it, although many times, in the end, there is nothing left to save. The second method Kiyosaki talks about is the habit of the rich. They do the opposite. They pay themselves first, and that's what you should do too. The idea is that when you get paid, you take at least 10% of your salary and put it in your savings account immediately. That is, as if it were just another bill that you have to pay. By doing this, you ensure that that money is saved and not spent on other things. Many people don't realize how much they are spending on paying bills, going out to expensive restaurants, and then saving just what's left. That's the wrong mentality. The key is to pay yourself first instead of making other people rich by buying their products. Number 3. Imitate the lifestyle of others. If your neighbor buys a fancy car, you may feel pressured to buy a similar one, or even a more expensive one, even if you don't need it, just to show that you are on the same economic level as them. This sounds superficial and destructive because it is. Advertising and marketing push us to constantly want to improve our things to supposedly be happier and more successful. This is called social comparison, which is a tendency to evaluate ourselves in relation to others. But this habit can be very harmful. First, because you can end up spending money you don't have on things you don't need. And second, because always comparing yourself with others can make you never feel satisfied with what you have. If you feel like this habit is affecting you, a good idea is to take a break from social media. Social media often shows only the best of people's lives. and this can make you feel like your life is not enough. Simply put, you should focus on your own path and your own goals. Number 4, have expensive hobbies. This is also one of the bad habits that many people tend to share. For example, maybe you love golf, which is a great hobby, but it's very expensive. Not only do you have to pay for golf clubs, which can cost hundreds of dollars, but also for golf club memberships, which aren't cheap. Or maybe you are passionate about technology, and every time a new cell phone comes out, you feel the need to buy it because you love technology, even though the one you have still works perfectly. Believe me, if you do things like this, you will not be able to get out of the rat race. Another example is traveling. Traveling is a wonderful and enriching experience, but if you're constantly planning expensive vacations without thinking about your budget, you could be hurting your finances in the long run. The problem with these expensive hobbies is that they can empty your wallet very quickly. So think carefully about what you want to spend your money on and do it consciously. Before continuing with the video, if you find this information valuable, I invite you to give it a like and subscribe to the channel so you don't miss new content. Let's keep going. Number 5, never ask for a salary increase. They pay you what you ask for, not what you are really worth. Many people get used to this and, without realizing it, they underestimate themselves in every job they get. With this mentality, it is difficult for you to get rich or have a good financial situation. In a world where money moves by how much things are worth, you need to know how to negotiate and value yourself properly. In simple terms, no one is going to give you a raise just because you work hard. You have to ask for it. You may find a new job and accept the salary they offer without question. Years go by, you do your job well, but you never ask for more money. Meanwhile, your expenses go up, the rent on your apartment, grocery shopping, and everything else. If you don't ask for a raise, you stay stuck, earning the same while everything costs more money. The key is in the negotiation. You have to learn to talk about money with your bosses, prepare a list of your achievements and how you have contributed to the company's success. But this is not only valid for employees in a dependency relationship. It also applies if you are selling a product or service. Don't be afraid to put a fair price on what you do. If you're not confident enough in your abilities or what you're selling, you'll likely end up selling it for less than it's worth. At the end of the day, if you don't ask for what you deserve, no one is going to give it to you. And this doesn't just apply to work or sales, but to anything you do in life. Number 6, depend on a single income stream. Relying on a single income is like putting all your eggs in one basket. If something happens to that basket, that is, if you lose your only source of income, you will be left without money to cover your expenses. But if you have several sources of income and one fails, you still have the others to sustain you and not have financial problems. And this is precisely what you must achieve. That is, in addition to your main job, you can have a small business, rent a room in your house through Airbnb, or collect dividends from stocks you have purchased. So if you lose your job, you still have that other income to compensate. This is a way to diversify risks. Having multiple incomes also allows you to save more, invest more, and be better prepared for any unforeseen events. There are no disadvantages to this. On the contrary, having different ways of earning money gives you peace of mind and stability. Therefore, don't put yourself in a situation where everything depends on one job. Look for ways to earn extra income and protect your financial future. Number 7, pay a lot of taxes. Paying taxes can become the biggest expense of your life. We all have to pay taxes, but many people simply pay them without thinking about how they could legally reduce that amount. Here, the central issue is how to avoid paying so much legally. Rich people know how to use certain business structures that give them tax benefits, and they also hire tax experts who help them pay less. If you want to stay one step ahead, one of the best ways to increase your wealth is by understanding the rules of taxes in a way that benefits you. For example, you can operate as a company rather than as an individual. If you are self-employed or have your own business, this can be very useful and, best of all, it is completely legal. For example, if you are a freelance photographer, you could register your business as a company and thus deduct expenses such as the purchase of a camera or the rent of your studio. Even if you think you'd rather pay more taxes than look for ways to legally reduce them, understanding how the tax rules work can help you save money. This money you save could be used on things that matter more to you, like donating to charitable causes you're passionate about, instead of letting the government decide for you where that money goes. Number 8. Making purchases at the last minute. Another bad habit for your finances is buying things at the last minute, that is, when you need them urgently, as this can lead you to make bad decisions. When you shop with time on your hands, not only is it stressful, but it also leaves you less time to compare prices and options. For example, if you need to give a gift for a family member's birthday that you had forgotten about, you won't have time to search for a deal or find something of good quality, and you will most likely end up buying something that is more expensive than what you would like to spend. Instead of shopping this way, it's best to plan ahead. This way, you can make smarter decisions and save a lot of money. Number 9. Pay only the minimum credit card amount. When you pay only the minimum amount on your credit card, it may seem like a good idea at the moment if you're short on cash, but it can actually cost you a lot in the long run. Because the balance you don't pay accumulates with high interest rates. Therefore, the more time passes, the more money you will end up owing. So this cycle of paying only the minimum and accruing interest can result in it taking longer to pay off the debt, and in the end, you'll end up paying much more than you originally owed. So, if you are in the habit of only paying the minimum on your credit card, it's time to change this. It is important to prioritize paying off your credit card debt as soon as possible to prevent it from continuing to grow with high interest. This way you can avoid spending more money than necessary and get rid of that debt faster. Number 10. Waiting too long to invest. Once you can moderate your expenses, you should start investing that money as soon as possible. A bad idea would be to leave it in the savings account since inflation exists, and that means that, over time, the money you have saved loses value. You must have a set of safe investments and other riskier ones. Invest in things where you are willing to risk, but not more than you can afford to lose. The sooner you start investing, the better. I know it can be overwhelming, and there are always reasons to put it off, whether due to lack of time or knowledge. But the more time passes, the harder it will be to achieve financial freedom. You must understand that investing early gives you more room to learn and adjust your strategy. Nowadays, many people are stuck in the routine of working their entire lives. But thanks to the greater dissemination of information, more people are choosing to start online businesses, obtain new sources of income, or learn about financial education to escape the rat race. Which one are you going to start adopting to accumulate your wealth? Leave us your answer in the comments. And with that, we finish this video. If you found it useful, don't forget to like and subscribe to the channel to watch the following videos. See you next time.